All right, let's talk about something really strange happening in the 2026 housing market. There's this new report out from auction.com, and it points to a fascinating clash, a real paradox between what real estate experts are saying and what they're actually doing. So let's get right into it. So check this out. On one hand, real estate investors are saying that affordability is the best it's been in 5 years for them. But on the other hand, their pessimism about the market is at a 5-year high. Better conditions, but a worse outlook. So what gives? Well, the big headline from this report, and they surveyed over 400 investors who specialize in this stuff, is that they are all bracing for what's being called a slow motion correction. So they're not expecting a sudden crash, but they definitely see the market cooling down. And the scale of this pessimism is pretty striking. A full 43% of these pros expect home prices in their own local markets to actually go down this year. That is the highest number we have seen since this survey even started back in 2022. And this feeling, it extends to the rental market too. We're looking at another record high here. 31% of them expect rents to fall in 2026. That signals pressure on, both sides of the housing equation. Auction.com CEO Jason Elnett, he actually puts a name to this whole trend. He calls it a slow motion housing correction. So this isn't some sudden panic, it's more of a gradual adjustment that developers are seeing with their own eyes. Okay, and this is where the paradox gets even weirder. You'd think, right, if prices are expected to fall, it must be because everyone thinks the market is a giant bubble. But that is not what's happening. A record low number of these investors, just 36%, think their local markets are currently overvalued. So they're predicting a dip, but they don't even think prices are too high to begin with. So how do we make sense of all this? Well, the key seems to be geography. This pessimism, it's not spread evenly across the country at all. It really, really varies by region. Where you are seems to change everything. And wow, this regional divide is stark. Look at this. Investors in the central U.S. are the most pessimistic about home prices. Half of them expect to drop. But when you look at rent, it's the Southeast that's the most bearish, at 42%. And meanwhile, the Northeast seems to be the most optimistic place on both fronts. Okay, so we've got a cautious, regionally divided market. But hold on, because here's the most surprising part of the whole report. If you stop looking at what investors are saying and you start following the money, a completely different story starts to emerge. And this brings us right to the core question of this whole thing. If you are an expert and you expect both prices and rents to fall, why in the world would you be planning to buy more properties? It doesn't add up. And yet, the data is undeniable. A clear majority, 59%, of these same pessimistic investors are actively planning to buy more real estate this year. What do they see that makes them want to double down on a cooling market? Well, the answer, in one word, is opportunity. There's a massive wave of what are called distressed properties, homes in or near foreclosure hitting the auction block. And this is creating a pretty unique buying window. I mean, just look at the surge in the Southeast. Foreclosure auction volume in Florida is up a staggering 176% year over year. Investors see a chance to grab these assets at a big discount. And here is where it all clicks into place. The intention to buy is by far strongest in the Southeast, where nearly 3/4 of investors plan to expand their portfolios. This lines up perfectly with where all that foreclosure inventory is surging. So they're not just buying in spite of the correction, they're buying because of it. All right, so we've kind of cracked the code on the investor's playbook, but what does all of this mean for the rest of us? Let's translate this complicated market sentiment into some practical takeaways, whether you're thinking about buying, selling, or renting. So here's the bottom line. If you're a home buyer, especially in the central and southeast regions, you might find you have a little more negotiating power this year. If you're a seller, you should probably be prepared for a softening market. National price growth is expected to be modest at best. And hey, if you're a renter, particularly in high-supply areas like the Southeast and West, some relief might finally be on the way. So ultimately, the experts who are right there on the front lines, they see this slow-motion correction not really as a threat, but as an opportunity. And that brings us to the final question. What does this correction mean for you?